Hello and welcome to Quantum Forex Market Overview. This is Mark and welcome to the first Quantum Forex Market Overview of 2014, January 5th. So as a review of last week, I talked about Euro USD, Pound USD, US Yen kind of being in a bit of confusion as far as consolidation periods and waiting for some breaks, higher low, lower high breaks. And I talked about the Aussie USD having a nice setup, and indeed the Aussie USD did go nicely in our favor, fulfilled its pattern. So we'll take a look at that. But first, let's look at our four majors that we keep up on our screen to tell if the market conditions are something we want to trade. And so we have the 4 hours, the Euro, Pound, Euro USD and Pound USD on top, US Swiss and US Yen on the bottom. Of course, we're looking for top and bottom to mirror and diagonals to mirror opposites. And we are closer now than we were last week. You can see that the US Yen and the US Swiss are kind of starting to line up the same direction. Not exactly. But the Euro USD and US Swiss are pretty mirrored off of the EMA 21 here in their opposites. We have this 5-wave move, we have a 5-wave move, so that's looking good. Obviously the euro has moved a lot more than the pound, as we can see in this relationship. So good to look at that. And now what we're going to do is take a look at a possible buy on Sunday or Monday on the Euro USD, and looking how we're going to wait for a shorting opportunity on the US Yen. And then we're going to take a look at the Aussie. Okay, so Euro USD first. Notice how we have this, what appears to be a zigzag, and we could call that an ABC without any deeper analysis of that. Now let's pull a Fibonacci level off of this swing high, swing low, and then we had this ABC move. You notice the first leg came into the 50, second one pierced up into the 127, 138. Now the 127, 138% is a zone, reversal zone we look for, but there was no harmonic relationship here unless you go with some of the new harmonic patterns. There's what is called a deep or an extended bat, and some people actually call this a crab, but it doesn't technically meet the original harmonic patterns. Okay, so but it is interesting, 127, 138, and now we come out of that with a move down, up, down, consolidation. This appears to be 5 waves. What we want to do then is go ahead and pull a Fibonacci from the low to the high of what we would call wave 3. And just see where we fall in that. Notice now we're approaching the 127%. Okay, so let's go ahead and put a horizontal line there. And no real major support, probably a little bit better support down at the 138, but even there you'd have to come a little bit lower into these areas to get that. So what I'm getting at is, predictively, we're not just going to want to take a buy here, even though we see that there's 5 waves that looks like they've broken the low. And so what we could expect is that this is a initial wave 1. If this is truly an ABC, we'd expect a 5-wave impulse. This could be the 5 waves of wave 1 waiting for an ABC retrace, and then a short again off of that. But there could be some smaller time frame, 1 hour, 15-minute time frame retracements that we could get into here. So let's drop down to the hourly. Now we notice this nice rundown. What we're going to do now is bring in a momentum oscillator, and I use period 10, and we have a nice divergence with this last wave down. So that's encouraging. So what do we wait for at this point? Do we, since we're approaching the 127, do we just go ahead and buy and just hope that it goes up? Some people do, and that's the way they trade, and that's fine. But there's ways to qualify this that we talk about over and over, and that is let this lower high break first and then look for the retrace, and then after that go ahead and buy. And of course involved with that would be a trend line break, which we'd expect a trend line break obviously if we break a lower high, and then we can do something called measuring and qualifying this move up. There are certain Fibonacci levels that we look for. And those of you who are getting this market overview for the first time or the second time, you'll notice that I do a lot of teaching, and I do more teaching in our other outlets, but this is as much as I can do in the 20-30 minutes that we have, and so you just kind of have to follow along. If you want more, you can always email me at quantumforex.com, and I can direct you to the proper place to get more education along these lines. But we wait for this break up here, so we can go ahead and put a horizontal line at our resistance level and look for some kind of a significant break. Probably want to put this up a little bit higher, maybe up into that area. Now notice if we go to where I just put my line, that's actually a 38% retrace of this full move. And sometimes you're not looking for that full move, you're looking for this move from this last impulse, and notice how even that was a 50%. The key is the break of this lower high, and then these, whether 38, 50, 61, that'll determine how long your C leg is and if you can be starting to look for harmonic patterns. So basically here's the setup: break a trend line, break the lower high, retrace back down. We have divergence, we'd be looking for a buy. That's a great opportunity on the euro, and hopefully we get that move down a little bit farther into the 127 to 138. That would be preferable. That way we've got a good solid Fibonacci support to be bouncing off of and taking that move back up. Where could we expect this to go? Well, very reasonably, let me pull this from the top. Once you have 5 waves, you can expect a minimum of a 38, which we have here, if not a 61.8 to 78. Depending if we get a good zigzag move, then this could be an ABC retrace back up into the 78 or 88. Another thing you can look for is trend line resistance right in here. This would have been trend line support. Notice we got a little bounce, bullish bounce, and then we broke. So if we were to come back up into that, or into a combination of trend line and horizontal resistance, which we have in these two spots, so between the 50 and just below the 78, somewhere in there, relative to the trend line, then that's a good opportunity too. So that's where you could set your take profits. If you were to get in, say at this point, if this does that, you'd have a, say, a 60 pip stop, and up to this line is 180 pips, so that's a 1 to 3 where you'd have a projected. And then if you only came to 61.8, you'd have about a 1 to 2. So good opportunity on that. The key on this one is if and when we get this retrace, look for a short. That'll be for your longer term. And then we'd expect to, since we've broken this higher low with our move down, expect a retrace when it happens, short, and then we're looking for a continued move down even below this area here. So there's some opportunity on the euro. US yen. What we want to do is go at least minimum of 2 points, find our trend line that did break. We broke our lower high. Our higher low. We've moved up and we keep putting in these higher lows, higher highs, higher lows. Well, we broke that higher low and we've come back up, and actually we're very close to retesting that higher low right now. You can see we kind of bounced slightly off of that, moved down to the hourly. So what we want to do is keep an eye on this, and you can even pull in a momentum oscillator on this one also. Now of course we're looking for the momentum on this one to be the opposite. Notice how we're still going up, From this point, we've been following this momentum oscillator up, and we keep climbing. There's going to come a point where that momentum oscillator starts to drop while the candles are still going up. So even though we're into very nice resistance here, I'm not convinced it's time to buy. You can see how on the 30-minute it's starting to drop and we're going up. What I would need to do here is drop down to a 15-minute chart. I need to see, in this case, I would want to short this from this point. I'd want to see this higher low broke on the 15-minute, move down and a retrace back up into that support becoming resistance, and then I'd consider taking a short off of that. But I'd want this to move and give me some price action, even though I'm at what we would call a predictive shorting area, and we have this off of a longer term time frame. So let's review this again, what we have on the weekly, because we are still looking for an overall bullish move on the Euro USD. I'm sorry, I just said Euro USD. Bullish move on the US yen. And the reason is we've identified wave 1, 2, 3, consolidation, 4, and then a 5 wave out. We've identified that on the US yen in 5 waves on the weekly. But we haven't approached our 127% area, which is what we like to see for a wave 5 extension off of this wave 3, and that's quite a ways away. However, it's extremely unlikely we'd keep going bullish all the way up to our 127%. That would be unlikely. Typically you have to have at least an ABC zigzag move up to your 127. So we are overdue now for a correction. We have pierced our previous high, which tells us that we're strongly bullish. So any retracement off of this that's significant being at least 50%, would be an opportunity to buy. Well, that is going to give us a pretty strong bearish movement on the lower time frames to the tune of possibly 400 pips. So on this weekly, if we come into where our support and our resistance levels are right in here, let's draw that line and then go ahead and move down to the daily. You can see that 88% there, which is irrelevant. Fibonacci levels are irrelevant for what we're talking about here, but that would be a point we could expect a retracement. Now if, as you can see, we closed out with this really strong rejection candle off of whatever support. So if we continue up, I wouldn't look to buy at this point because of, look at the divergence on this. We're clearly way overdue for correction. I would be looking for a bearish setup on the lower time frames, on the 4-hour and the 1-hour, back down into this support level down in here. And one of the ways you can gauge that is considering this wave 1, 2, wave 3, small wave 2 comparison to the wave 3. We're looking for quite a large 4-wave correction out of this. Now the fundamentals are strong out of Japan, which is what's causing this drive, but 95% of the time it'll still fall within relevant Elliott wave rules. So our 61.8%, which we'd expect a retracement to if it came down from here, would be around 99.95, and that's that's just below these support levels. Anything between the 50 and the 61.8, because of the size of our wave 3, strong wave 3 drive, it's possible we could have a shorter than normal 4-wave because of the bullish volume. So we could be looking for an ABC dropping down even to the 50 to the 61 or around this 160. So anything from like 101.00 down to 199.95 or 100.00 would be a very good opportunity to buy. In the meantime, I'd look to short that. And we have the means right here, this break of the higher low and then a retracement back up in, but be careful how you qualify that. But if you can get in on that, and it might take 1 or 2 tries to get in, depending on your qualification process, you've got a good 400 pips possibly on a short. Okay, let's see where we're at time-wise. We're at 14 minutes. Let's look at pound yen. Notice pound yen on the 4-hour. Nice strong move down, took out the higher low. Same type of thing on the US yen. What we're waiting for here is simply a move back up in. Let's go ahead and check for our momentum. Okay, great momentum right there. Momentum oscillator divergence. Look at how we came down from here. So real nice on the divergence, and then we broke the higher low. Just waiting for that retrace of a minimum of 50% of this move. If we get back up into 61.8, look for a shorting opportunity. On the 4-hour, where clearly divergence is still strongly down, and yet on the hourly, we do have this temporary divergence up, which should afford us this move back up into maybe the 61.8 even, and we've already got a zigzag going here. So 61.8 to 78, great shorting opportunity. Look for the rejection candles. If we don't get it, but we get up into the 50, you can see we've got a resistance right around in this area, and qualified would be necessary on the lower time frames. And then where could we possibly go on that? Well, the next real support, strong support, is down in this area at around 166.58. So let's say we were able to short this around 61. It's about 600 pips or so. If you can get a 100 pip stop loss, which should be no problem, that'd be a 1 to 6 risk reward you'd be looking at. I bet you could even find that off of a 50 pip stop loss. All right, let's look at the Aussie USD. So going to the 4-hour, this is what we were talking about last week. All of this movement up, all of this was from last week's move. So I'm going to review slightly where we're at from last week. We had this what we call X wave, came down and we were going bearish, broke the trend line, moved up. We did come into proper Fibonacci relationships, 38%, so that qualified our first leg up. Again, if you don't understand this, no problem, email me. My email address has popped up here a couple times on this video. You can go to email me, ask mark@quantumforex.com. Ask me for more information, and I'll send you to one or two of different sites. I'll get you some free ebook, some free videos with some basic training, and see if our education might be for you. Okay, so wave, what we're calling right now A, wave B, and this C wave is what we were calling last week, and it moved in there nicely. And I talked about this what we call a Gartley pattern, a bullish Gartley pattern. Well, the market's not perfect, it never is, well, rarely, can't count on it being perfect, but the Gartley pattern comes down to a 61.8 on the A leg, retraces up at least to 38%. In this case it was about a 61, came down and pierced our 78, pierced our 88, but did not close below it on the 4-hour. Had we closed below this, we would then have waited for it to move below the 100, retrace back up, find resistance, and then we would have shorted that down to what I was talking about, the bullish bat, because a failed Gartley typically then becomes a fulfilled crab, not a bat, I'm sorry, a bullish crab. Has a 61.8 A leg and a 161 point extension C leg, and it's very possible once you miss the Gartley, if it misses, you wait for a break, a retrace back up into the 78 or the 88 typically, and then in this case it would have been about a 100 pip profit opportunity down to that 161.8, at which point you look for some rejection and then a buy after that. So it's a nice way to recoup any losses of your stops off of a Gartley if it breaks, because that's your next logical take profit place, moving from a Gartley to a crab. Okay, but what happened, we did not close below the 88 and we moved up nicely. So in the case of what I had going, one of my stops got stopped out. I actually, because I set one below the 88 for this Gartley so I can get a tighter risk reward, but then my other stops that were down behind the 100%, they kept in. Then able to make profit on the way up. And then we expected a retrace, simply because we were following Elliott wave on the smaller time frames, and we saw wave 1, 2, what we perceived as wave 3, wave 4 retrace, and then wave 5. And when I pulled a Fibonacci level from the top of what I thought was wave 3 to the back, you can see how we got up into this 127 area. I didn't quite touch it, but it was at that point we started consolidating. We were able to take out some profits. Our other profits got taken out with a stop. But then when we got back down to what we could call a double bottom, and we had this rejection candle, we went ahead and entered again, and were able to catch more pips. And then those pips produced roughly 100 to 150, somewhere in there. Once we got into this consolidation, we noticed that there was quite a bit of divergence going on the 15-minute chart. You see how from this point on, momentum oscillators going down pretty sharply. Candles kept going up, but not strongly up, more of an angle. And so we were able to begin to move our stop losses up behind these little moves up. And so actually our last stop got taken out right in this area, or if you were really paying attention, possibly in this area, but ours were setting here. So we got taken out, and then now we're doing, not trading the short on this because it's still pretty strongly bullish, and waiting for some kind of a support level, which I am looking at that right at this level right in here. We're not there yet, but I'd expect that level or something farther down, but I'm not going to take this on a predictive. I want this to do something for me. I'm down to the 30-minute time frame right now. My lowest point, divergence is now starting on the momentum oscillator. If we drop down again, we'll have divergence, and that's going to then afford me the opportunity to get back in a buy. I'll wait for my lower high to break for a retracement, and so I'm just going to give you a predictive setup. Let's just say we get down into what currently is a 38% here, and there is some support levels right in here. If the candles get down there, I'm going to wait then for a break. So let's say we move down, let's say we consolidate a little bit more and then drop. Okay, just completely hypothetical. But then I'd wait for the high, wherever that high is at, my last high, lower high, I'd wait for that break, and then I'm going to wait for a retrace. Of course, I have to have divergence at this point, which is currently developing. I think we'll have that. Move up, move down. That way my stop doesn't just have to be hanging out there with one of these levels. I actually put it in a lower low and then wait for this previous high to break. My stop can then, at least my first one, can go then 18 pips in, if this scenario played out, behind this low. And then my next stop could go down here or down here, wherever I want it, be a much larger stop. Of course, I'd have to adjust my money management to for my appropriate percentages. Okay, so I hope that's helping you guys that are watching these consistently. What you should be doing is picking up some terminology, some ideas on Fibonacci, some ideas on Elliott wave, some ideas on how to qualify a trade. Everybody has to come to terms of how you want to qualify your trade. The best thing I can do in these market overviews is give you some predictive zones that we expect to turn around. It doesn't always happen, as you can tell in our Aussie USD here. Some great trade happened at the last week of the year. Doesn't always happen, but when it does, it's great. We're expecting some strong moves continuing into January and February as the market picks back up. But you need to come up with a system based off of fundamentals, the fundamentals of trading, not the fundamentals of the market, but the fundamentals of technical analysis. Elliott wave, Fibonacci, stochastics, support and resistance, candle patterns, chart patterns. All of those, actually, candle patterns, chart patterns, they all fit within the wave patterns of Elliott wave. And I'm going to be doing a series here which will be out in the next week on Elliott wave. I encourage you to look for that. Again, you can email me for that also, but it'll also be on some other sites. just a little mini series, about 4 or 5 videos, but it'll help people walk through basic understanding and how we use Elliott Wave to accurately predict the market. And then you need to have a qualification system. For those of you who are signed up on some of our basic education, you are learning a qualification system, the one I talk about here, and you're learning about how to money manage with that and set your stop losses. So I hope these are helpful to help you become a more successful trader and get your feet grounded in the market. What we want to see you do is learn how to demystify the market. The market does not have to be a mystery. When it is a mystery to you, stay out. When it becomes clear according to your predictive analysis, then you go ahead and engage it. So that's all for now. God bless you guys, and look forward to seeing you in some of our other videos.